quick overview of the credit market over the last quarter ended September 2022. We saw credit markets regaining momentum with a total term issuance reaching about 35 billion, which is a marginal increase from quarter two figure of about 30 billion. The corporate sector dominated issuance activity, accounting for 50% of total volumes issued. This was followed by the financial and securitization sector. The state-owned entities and municipal sector were absent during the quarter. As mentioned, the debt capital market has been quite active during the quarter, with the highest level achieved during September. Quarter 3 saw a significant rise in corporate issuances as well as new securitization offerings, such as the 2018 and the first gender-linked bond issuance from Barloworld. The key drivers of the issuance were, as I mentioned, Barloworld, which has typically issued through private placements, only 3 notes being offered through auction in the past 5 years. However, they returned twice during the quarter, with the first one being raising senior unsecured notes and the first gender-linked bond in August. MTN also returned to the market for the first time in 2022, raising tenors 3 up until 7 year senior unsecured notes. Both these auctions were well supported. Other notable issuance came from our 3 top banks, where they issued AT1 as well as Tier 2 paper. We noted specifically for Standard Bank and Absa, which raised green Tier 2 paper. Importantly to note is that term issuance year on year has increased by about 9% to just over 90 billion. And given that several issues have returned to the primary market this year, there is obviously a lot more data points available for price discovery and auctions being well supported. Now, in terms of spreads, the lack of credit supply and bank participations in auctions, spreads continue to trend tighter, with some issuance spreads compressing at a rapid pace, pricing closer to banks or even at pre-pandemic levels. We therefore expect more issues to come to market, given these factors noted. With regards to our fund positioning, given our systematic approach to investing, a credit cycle indicator ultimately informs our thematic positioning. This means that we are credit cycle cognizant, considering both fundamental data and macro factors. Currently, from a theme perspective, we are still at an elevated risk cycle with suppressed yields. Now, importantly, while our asset allocation is geared towards defensive sectors, we continue to see other areas of opportunity to invest in based on a risk-adjusted basis.